Bitcoin just closed the yearly around 87.5K, nearly 30% below its peak, and Bitcoin dominance is currently sitting at around 59%, while the total market cap is hovering around 3 trillion without meaningful expansion. By most performances and allocation metrics, alts are starving. So why did Bitwise file 11 altcoin ETFs in a single day? Welcome back to Blackroomtrade. In this playlist, we don't predict price, we analyze the market environment instead of chasing signals. If that's what you're looking for, hit subscribe and let's get into it. On December 30th, Bitwise filed for 11 crypto ETF products with the SEC. Same week, Grayscale filed an S1 tied to Bitstamp, marking the first US filing related to the assets. Now, these are filings, not approvals, not launches, and this is where most people get it wrong. ETF issuers don't make money when prices go up, they make money from fees. If Bitwise launches an Aave ETF, attracts 500 million in assets, and charges a 0.5% expense ratio, that's 2.5 million per year just in revenue. Whether Aave goes up 50% or down 50%, they'll still collect the fees. So their incentive is to gather assets, not predict price prediction. So when you see 11 filing at once, don't think institutions are bullish on altcoins. You want to tell yourself institution wants to be first in line to capture fees if this market opens. So why file 11 ETF at once? Let's be precise here. Filing an ETF is not free. It involves legal work, compliances, and regulatory review. But Bitwise isn't a startup. They already run crypto ETFs, and they already have infrastructure, legal teams, and relationship in place. That means the marginal cost of filing is far lower than launching a new ETF from scratch. Now, the expensive part, custody, operations, marketing, only happens if the SEC approves. That's an optionality play right there. Spend a fraction now to get in line. If approval comes, you're positioned. If not, you lose legal fees, not the entire operations. And Bitwise isn't alone. As you can see here, everyone is racing to file because whoever gets approved first tends to capture the most assets. Look at Bitcoin ETFs. BlackRock's IBIT alone has taken around 62 billion since launch. So Bitwise isn't filing because they think Aave is going to move. They're filing because if a competitor gets approved first, that fee revenue is gone. And here's the key point. Assets managers don't file paperwork for fun. Each filing carries legal cost, internal resources, and reputational risk. So no institution files 11 ETF at once unless they believe something has changed in the regulatory environment. So what exactly has changed? That brings us to the Clarity Act. This is the crypto market structure bill designed to clarify which digital assets are treated as securities and which are treated as commodities, whether the SEC or the CFTC regulates them. In late December, White House crypto advisor David Sacks confirmed that Senate hearings are expected in January. The bill hasn't passed yet, but the signal is clear. Institutions see regulatory clarity approaching and they're positioned before the rules are finalized. Don't forget this. For years, crypto has been stuck in a turf war. The SEC says tokens are securities, while the CFTC says they're commodities. While investors don't know what sort of protection they have, there were no clean answers. No rules, just a bunch of lawsuits. However, the Clarity Act aims to resolve that. Now, here's the key part most people miss. The SEC approves all ETFs. That's their job. An ETF is a financial product, meaning shares in a trust. Those shares are securities, always. So whether it's Bitcoin ETF, Gold ETF, or Solana ETF, the SEC is the one who approves the product. But if the SEC believes the underlying assets is an unregistered security, they won't approve an ETF tied to it. So classification of the token itself is what unlocks or blocks the ETF path. For Bitcoin, it is easy. It looks like gold, no issuer, no CEO, no cash flow promise. However, Ethereum is where it gets interesting. When ETH launched, it looked closer to a security. By 2024, the network was decentralized enough that the US regulator approved spot ETH ETFs. Not because Ethereum magically changed, but because the regulatory interpretation evolved. If the Clarity Act framework eventually treats assets like Solana, XRP, Aave as commodities, the ETF path becomes clearer. But if classification stays murky, approval stalls. That's why issuers are filing now. They want to be first in line when the rules solidify. Now you might ask, what does this have to do with Bitcoin? The answer is everything. Bitcoin ETF launched back in January 2024, and since then, they've accumulated tens of billions inflow, with IBIT alone around 62 billion. That infrastructure took years to build, and once it was approved, capital followed. What we're seeing now with altcoins ETF filing is the same playbook, just earlier in the cycle. Infrastructure first, capital later. But here's where it's get interesting. While Bitcoin ETFs just saw over $300 million inflow on December 30th, snapping a multi-day outflow streak, Ethereum's ETFs are still struggling to catch momentum. And yes, there was a positive print that day, but flows are uneven, concentration is narrow, and Ethereum hasn't shown sustained demand yet. With that being said, Ethereum still hasn't caught the bid quite yet, and this tells us something more important. Capital rotation hasn't started. Bitcoin is stabilizing, Ethereum is lagging, and alts are definitely starving. But it seems like institutions aren't really waiting for the rotation. So let me be very clear. This is not alt season starting, this is not money flowing into alts yet, and this is definitely not a guarantee that any ETF is going to get approved. What this is a signal. Institutions don't expend filing during extreme fear environment unless they believe conditions are about to change. Now, filing 11 ETF at once is not normal. It's almost like a statement. But institutions are already preparing. The question isn't whether altcoin season is here, but the question is, are you paying attention to who's building for it? Alright guys, that's what I have for you today. If this helped you gain a little more knowledge in terms of what the market is doing right now, hit that like and subscribe button, and I'll see you in the next one.